Let's get it going now with our trader rundown. Nick Santiago of In the Money Stocks is joining us. Nick, how important to the market is that speech today from Fed Chair Powell at Jackson Hole, Wyoming?
Well, I think in the short term, it's very important because it can cause some reactions. But the bigger picture is the Federal Reserve has to start, or they're going to start, their quantitative tightening. So when that happens, you just got to realize the liquidity is not going to be in the system like it was 6 months ago or a year ago or 2 years ago. Remember, from December 2018, the Fed started to do a quantitative easing of $120 billion a month. They were buying U.S. Treasuries as well as mortgage-backed securities. They're no longer doing that, and they're going to actually do a $95 billion QT, quantitative tightening. So that is going to affect the markets going forward. This game is all about liquidity. When liquidity is plentiful, markets go up. When liquidity is getting drained, markets go down. Let's not try to make too much out of it. That's really what happens. And I would be very, very cautious. There's still a fair amount of liquidity in the system right now. But as it starts to dissipate, I think that the markets will start to come down. So I think you have to be a little bit cautious. Fed Chair Powell's, he's threading the needle here. And to his credit, the markets have responded. But just remember, it's all about the liquidity going forward.
What will be the sign that liquidity is coming out of the market?
Well, you're going to see a high volume reversal day to the downside, and then you'll start to see lower highs. And that's going to tell you that the liquidity is coming out of the system. And I don't think they have a choice but to do it. And the reason why I say that is if you just look at the price of food right now, I know gasoline has come down quite a bit, but it's kind of a manipulated market when you're selling all of the oil out of your strategic petroleum reserve. These are not sustainable moves. And again, the Fed has certainly raised rates. That's one part of it. But, they need to bring that balance sheet down. And it's going to take a bit to do that. So I think traders better brace themselves. We could be in for, as we say, a September to remember. And that's what you're going to start to see.
Love having you on. Thank you so much, Nick.
Thank you for having me.
Go to businessfirstam.com for where to see our show on TV.